Good afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. It would be wrong to conclude that it was a quiet week given global equity markets were little changed, as beneath the surface there were plenty of interesting stories bubbling away. There were mixed signals on Chinese growth as China's Q2 GDP growth slowed to 6.2%, the weakest pace since the reported data began in 1992. However, data for the month of June, such as factory output and retail sales, all beat estimates, suggesting that the government stimulus is starting to cushion the impact of the trade friction. While China's economic data supported global equity markets at the start of the week, Donald Trump played the role of spoiler by saying that if the trade spat remains unresolved, he could impose more tariffs on China. However, Donald Trump's threat of more tariffs on China only increases the chances that the Fed will cut US interest rates. Interestingly, the Fed's Beige Book showed that while the US economy expanded at a modest pace, the report noted job gains were slowing, inflation was slightly weaker, and that there were widespread concerns about the possible negative impact of the trade-related uncertainty. Additionally, Jay Powell, the Fed chairman, this week said that the Fed is carefully monitoring downside risks to US growth and will act as appropriate to sustain the economic expansion. This all suggests that it is now a foregone conclusion that the Fed will cut US interest rates during their next meeting at the end of July. Although the likeliest outcome is a 0.25% interest rate cut, we believe that there is still a good chance of a larger 0.5% interest rate reduction, as it is better to be proactive and cut early and aggressively to cushion the trade uncertainty, rather than be reactive and wait for the economy to actually start turning down before meaningfully reducing interest rates. Now, while it may be difficult to believe, there is more to global equity markets than just US interest rates, and this week the US earnings season got underway. Results were mixed, and companies such as eBay and IBM saw their shares end the week higher after beating expectations. However, Netflix shares fell after it announced that it had lost customers in the US and missed its global sign-up target, highlighting that consumers are highly sensitive to price increases, following the recent inflation-busting increase in subscription prices. And finally, this week we have an ECB monetary policy meeting, and on Tuesday we finally find out who our next Prime Minister is. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.